All right, welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. I see we've already got some questions chatted up, which is fantastic. Please continue to chat up those questions. We will knock out the questions that were chatted up front in case you got to go. But if there's other questions that come up as we go through the slides that we wanted to share, please chat those over now just to make sure that we get a chance to get to them. All right, welcome to another session of the My Solo 401k Financial Daily Webinar Series, as well as Q&A session. If you're finding this video to be helpful, please like this video as it helps us to get the word out to other solopreneurs, other advisors like yourself. Please, again, also chat over questions. This is your chance to get answers. So please chat over questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. We like to help you stop overpaying taxes and start building real retirement wealth. Today's topic is no EIN, no problem. Still open your solo 401k by December 31st deadline. And the reason we highlight that, to put it in context, is that a lot of these discount brokerages like Fidelity, Schwab, just to name a couple, they require that you have an EIN in order to open an account, whereas we don't. So we want to break that down. But before we get to the breakdown into the slides, let's knock out the questions that were chatted up. First one is from Julian Gomez. Do your documents expressly state that someone who works less than 1,000 hours in year one is not an employee and that we still qualify, or something to that effect? Yes, they do. So if you're self-employed with no non-owner, non-spouse W-2 employees, you're eligible. Now, the documents are going to be a full 401k documents so that they're approved by the IRS. So we offer IRS approved documents. So it's going to have provisions in there regarding the eligibility of other employees. And so those are going to be drafted in a manner to give the self-employed person flexibility. So those are going to be drafted in a manner that other employees, future employees, would have to work at least 1,000 hours a year with a year of service, or 500 hours per year for 2 consecutive years, to be eligible. So that does give the self-employed person some flexibility, some protection to be able to maintain the solo 401k in the event that they ever did hire some employees in the future. Those employees would not be immediately eligible. So if they never become eligible, then they can continue to maintain the plan. But if it looks like they're going to become eligible, then the solo 401k owner has a choice to either convert the plan to a full-time employer plan that could accommodate those employees, or shut it down before they become eligible and transfer all the assets out of the plan to an IRA. I have a potential related group company that is a part-time employee who worked 3 months. I have no idea if she will stay or how long, but I don't want to be prevented from having a solo 401k. So yes, you would be eligible as long as you don't have any non-owner, non-spouse, full-time W-2 employees. Somebody that's only been working 3 months is not going to be eligible, but you got to be careful because time goes by quick and they may become eligible at some point. Great question, Julian. Thanks for bringing it. We've got a series of questions from Joe. Thank you for bringing it. Under adoption agreement document, compensation selection as section 415 safe harbor option for broader definition of compensation for S Corp. Explain more. So that's based on how the self-employed business is taxed. That's how the compensation provision is selected. So for example, if the outline application indicated that the business is taxed as an S Corp, then the W-2 selection would be indicated. But if it is something else, then a different box is selected. So that's just how it's drafted. But keep in mind, you do have the option to aggregate from all sources of self-employment income. So even if you've got multiple sources, you can aggregate from all sources of self-employment income to justify contributions. Between a bank and Fidelity brokerage, which option typically allows the fastest rollover from a solo 401k after tax to a Schwab Roth IRA? Well, the fastest and easiest is going to be to have the brokerage account at the same place that the Roth IRA is at. For example, Schwab. So which account should be opened first to fund the after-tax contribution? So you need to first, when you make a mega backdoor Roth contribution, you need to first deposit the after-tax funds into the after-tax account for the solo 401k, for example, at Schwab, before it's transferred out of the solo 401k to a Roth IRA. But if it's at the same brokerage, like at Schwab, that can be electronically done at Schwab. Then the customer, the solo 401k owner, would submit the form on our website to give us the information we need to prepare the 1099-R. Keep in mind that if this is going to be a 2025 contribution, as long as you sign up by the end of the year, you preserve the right to open up accounts and make all types of contributions for 2025 until your business tax return deadline, including any time we filed extension in 2026. So you don't have to rush and make this 2025 after-tax contribution by the end of the year. To ensure my solo 401k after-tax contribution and subsequent Roth rollover are reported on Form 1099-R for tax year 2025, does the rollover need to be completed by December 31st? Yes, if you want it to be on a 2025 1099-R, but there's no reason, there's no requirement. Many people set up a plan at the end of the year and they don't make those 2025 contributions until their business tax return deadline, including any time we filed extension in 2026, which necessarily means that the 1099-R is not going to be issued until 2026. Yes, so if you transfer the funds in 2026, then it's going to need to be reported on a 1099-R, but that's fine. There's no issue. There's plenty of people that have 2025 contributions or that will have 2025 contributions that are deposited and transferred in 2026, and therefore that the transfer is not reported until a 2026 1099-R. So as far as a link for the process, one second. So if, I'll pull it up quickly here. We've got a good procedure page. And here we go. And this is the master procedure page. I just chatted over. Thank you for the good questions, Joe. Another question from Joe. How to request rollover of funds from solo 401k after tax Fidelity account to existing Schwab Roth IRA. Most people would find that it's easier to transfer the funds from the after-tax solo 401k account at Fidelity to a Roth IRA at Fidelity, then submit the form on our website to let us know about that after-tax to Roth IRA transfer so we can capture the information needed for the 1099-R. Then instruct Schwab to retrieve the funds from the Fidelity Roth IRA over to the Schwab Roth IRA via the ACAT system. Does your company offer LLC corporate setup in addition to the solo 401k? No, we don't. We don't set up entities for the self-employed business. Thank you for the good question, though. Appreciate that, Enrico. Next question from Lena. I emailed this question last week. I actually over-contributed to my pre-tax bucket by $7,500 when it should have gone into the after-tax, then Roth for the mega backdoor Roth. The money has already been invested and earned some capital gain. How do I fix this issue? Well, the requirement is to separately account for the different types of money. And so it looks like the funds were inadvertently deposited into the pre-tax account. And so what some would do, just as an abundance of caution, because you technically don't have to have the way that we recommend separately accounting for the funds and the way that we've always done things is to have the funds go into separate accounts, right? Because that's the very clean and easily documented way to separately account. But technically, it could be done via other means. So just to be consistent with the separate account structure, one could make a reasonable decision to transfer the funds that were inadvertently deposited into the wrong account, along with any gains that accrued after that deposit, over to the correct account that they should have been deposited into. So for example, in this case, the after-tax account. Then transfer the funds from the after-tax account to the Roth account. So if there were any gains that accrued, those would need to be taxable. And that after-tax to Roth transfer would need to be reported on a 1099-R. So the customer would need to submit a form on our website to provide us the information we need to prepare the 1099-R, including reporting any of those gains as taxable. And then the individual would add the gains portion to their income for the year of the transfer. Thank you so much for the great question, Lena. I just opened a single member LLC. I'm wondering if I can open a solo 401k and fund employee portion before the 31st. So it's going to be difficult to do it before the 31st with the holidays, et cetera, and financial institutions themselves are often very busy and their processing times go up. So just opening a single member LLC doesn't automatically qualify you to set up a solo 401k. So having an LLC is neither necessary nor sufficient. What is required is to be self-employed, including reporting earned self-employment income, which one can certainly do as a sole proprietor with no formal legal entity, for example, filing the Schedule C, and not having any non-owner, non-spouse full-time W-2 employees. If that's the case for 2025, the individual can certainly set up a solo 401k plan now, and we make it easy to meet the deadline because we prepare the documents within the same business day, and that'll keep all their solo 401k contribution options open, including the employee contributions. So in other words, they can make all types of contributions for 2025 by their business tax return deadline, including any time they filed extension in 2026. So they can take their time to open up accounts and make those contributions. Josh, in doing a mega backdoor Roth, we contribute post-tax money into the solo 401k and then roll to a solo 401k Roth. Can I roll it out of the solo 401k Roth into my Roth IRA? Well, you would need to then meet a triggering event. So generally, you cannot transfer funds out of the solo 401k until you meet a triggering event, such as being age 59 and a half or older. Now, one exception are voluntary after-tax solo 401k funds. So if the individual made a voluntary after-tax solo 401k contribution to a separate voluntary after-tax account, they could then transfer all those funds immediately without needing to meet a triggering event over to a Roth IRA. But if they move the funds to a Roth solo 401k, now they're going to have to meet a triggering event, such as being age 59 and a half before they roll the money out of the plan to a Roth IRA. Here's that link that I mentioned that was requested for the procedure. Enrico, thank you for your answer. If I set up an LLC elsewhere, is there special language that I need to be aware of in order to later to be able to set up a solo 401k with you? Well, no, for you, if you're setting up an LLC for your self-employed business, like say you're a consultant or something, there's no language that you need in that LLC. Again, having an LLC is neither necessary nor sufficient. The key to be able to set up a solo 401k is you need to be self-employed, including reporting earned self-employment income with no non-owner, non-spouse employees. Thank you for the good follow-up question, Enrico. Lena's got a follow-up question. I already submitted a 1099 request earlier, but I found out about the $7,500 pre-tax overfunding. Should I submit another 1099 request? Yes. And then we'll aggregate when generating and preparing the 1099-R. Okay, wonderful. Those are great questions. Thank you for bringing it. So now let's dive into the slides regarding, again, the topic. No EIN, no problem. Fidelity, Schwab, the discount brokerages require having an EIN for your self-employed business, but we don't require it. So even if you don't have an EIN for your self-employed business, if you are self-employed, including reporting earned self-employment income, and you've got no non-owner, non-spouse employees working for any business owned by you or a spouse, if any, you are eligible to set up a solo 401k, and you can do it easily by December 31st because we established the plan within the same business day. So, and we should note that the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So why this matters? Well, of course, the December 31st setup deadline is approaching, but solopreneurs with no employees can preserve their ability to make all types of contributions for 2025, including opening up accounts and then making those contributions in 2026, as long as they establish the plan by the end of the year. If you go to establish the plan directly with Fidelity and Schwab using their vanilla plan, if you don't have an EIN number, you can't open up an account there. So it's a roadblock. So if you're not able to obtain an EIN number before the end of the year, you may lose out on being able to preserve those 2025 contributions if you try to go with the Fidelity or Schwab vanilla plan. But if you go with my solo 401k financial, you don't need to have an EIN number. We don't require an EIN number. So it's a myth that you need an EIN number to open the solo 401k. No EIN number is needed to open a solo 401k at mysolo401k.net. So you can open the 401k plan now, set up the 401k plan in 2025, meet the December 31st deadline, then take your time to open up accounts and make contributions in 2026. So Fidelity, EIN required. Schwab, EIN required. Both can delay year-end setup, right? For example, the IRS website to obtain an EIN number is not open on the weekends. It's not open at night. It's going to go down at the end of the year, probably around the 26th is what folks are saying on social media. But that's okay. You don't need an EIN number to open up a solo 401k with my solo 401k financial. And you get the advantages of having a 401k with my solo 401k financial. For example, same day plan documents, mega backdoor Roth setup. So it allows you to make the mega backdoor Roth solo 401k contributions. You can ultimately open your accounts at the bank or brokerage of choice, including Fidelity, including Schwab. Those are some of the top options. Plus, you get access to the $1,500 in solo 401k tax credits. Plus, you get the ability to take a 401k loan. You have the ability to invest in alternative investments like real estate and crypto, plus the ongoing compliance support that we provide. For example, filing Form 5500EZ when required, filing Form 1099-R when required. Customers just need to submit the information that's needed in a timely fashion, and then we'll handle that for no additional charge. So you can open the plan now and fund it later. So we establish the plan within the same business day. So individuals just need to sign up by the end of the year, submit the online application, and payment is made. We prepare the documents within the same business day. Then you can take your time to open up accounts. You can take your time to determine how much you're going to contribute. Take your time to make those contributions. You'll have until your business tax return deadline, including any timely filed extension in 2026. So you can keep all your solo 401k options open. Employee, employer, and mega backdoor Roth. You can do it all. So who's eligible for a solo 401k? Well, it's an owner-only plan designed specifically for self-employed individuals with no full-time W-2 employees. So you've got two prongs to the requirement, two elements. You need to be self-employed, and the way that you demonstrate that is by reporting earned self-employment income. So for example, if your business is taxed as an S corporation or a C corporation, that's going to be W-2 wages that you receive from the S corporation or the C corporation. Whereas if your business is taxed as a sole proprietorship, maybe a single member LLC that reports on Schedule C, you report earned self-employment income by filing a Schedule C. Or let's say your business is taxed as a partnership, then earned self-employment income would be income reported on line 14 of the K-1 that you receive from the partnership. So that's one half of the eligibility criteria. The other half is that it's an owner-only plan. So that means you cannot have any non-owner, non-spouse, full-time W-2 employees. So you could have contractors. Your spouse can participate, even if your spouse is not an owner of the business, as long as your spouse is working in the business and reporting the spouse's own earned self-employment income. You could have a contractor, you could have W-2 employees, but you have to just be cognizant and careful that they're not working on a full-time basis. So they're not working 1,000 hours or more per year with 1 year of service, or 500 hours or more per year for 2 consecutive years. You can have a solo 401k even if you've got a day job, even if you participate in your W-2 employer plan, as long as you are reporting that earned self-employment income with no non-owner, non-spouse employees. So when is the EIN required? So yes, you will need an EIN ultimately when it comes to opening up the account, but you don't need an EIN for your business. So we will obtain an EIN number for the 401k, but we can obtain that next year when you're ready to open up the accounts. And we will obtain it as part of the onboarding process. And then that EIN number that's for the 401k, not for your business, but for the 401k, will be used to open up the bank or brokerage accounts, not for establishing the plan. So the critical December 31st deadline is you just need to sign up. So just focus on the paperwork because that is what creates the plan. A 401k plan is a legal entity. So like any legal entity, it's the documents that create it. So we are an IRS approved plan provider. So we use our IRS approved plan documents to create a 401k plan for your business. And then that is what creates the 401k. Then you therefore meet the deadline. And then you can take your time to open up accounts and make all types of contributions by your business tax return deadline, including any timely filed extension in 2026. So what you need to do by the end of the year is focus on the paperwork because that's what establishes the plan, right? It's a legal entity. So like any legal entity, it's the documents that create it. You don't need to open up the accounts. You don't need to obtain an EIN number for the 401k. You don't need to fund the accounts by the end of the year as long as you sign up by December 31st. And we make it easy to sign up. It's a simple 1, 2, 3 process. So step 1, you submit the online application on our website. You can find it quickly and easily at mysolo401k.net. Just click on open account. Once the application is submitted, payment is made. We prepare the Solo 401k documents within the same business day. We create it in our system of record. That's what creates the plan. Then you can take your time to return the completed and signed pages. You can take your time to let us know where you want to open up the accounts. And then we will help you do that. We'll help you open up the accounts at the bank or brokerage of choice. But again, that could be next year in 2026. So by signing up by the end of the year, you reap the benefits. For example, you lock in the ability to make all types of contributions, including employee, employer, and after tax. In other words, mega backdoor Roth contributions, all the way until your business tax return deadline, including any timely filed extension in 2026. You also reap the benefit of being able to start to claim $500 per year of tax credits. So establishing our plan will make the self-employed business eligible to claim $500 per year for 3 consecutive years for a total of $1,500 in tax credits, which will more than cover our fees for the first 7 years. We charge a totally flat fee of $650. That includes the $525 establishment fee, plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee that covers the second year. Okay, wonderful. That takes us to the end of the slides that we wanted to share. Now let's go back to the questions that are being chatted up. Thank you for bringing the questions. And before we go back to the questions, again, if this is helpful to you, it's helping you feel more confident about your future, please do take 1 second to like and subscribe. Liking tells the platform that the content is valuable, which will help others like you, other solopreneurs, other advisors, find it. Subscribing guarantees that you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. So back to Lena, what if there was a loss since I invested a couple of weeks ago that is only worth, say, $7,300? How do I move the overfunded pre-tax $7,500 to the after-tax? Do I transfer $7,500 or $7,300? That's a great question. So you would want to put the 401k in the position that it would have been if you had followed the right procedure. So just move over the 7,300, but when submitting the form, you're going to want to let us know that the basis was 7,500 on that form, and then the gain would be 0. Can I do the after-tax contribution to my solo 401k before my employee contribution? Yes. I mean, there's no requirement that it goes through a certain waterfall or sequence. You could skip employee, you could skip employer. You could just make 100% voluntary after-tax contributions. Great questions. Back to Enrico. When you sign up, you ask for my personal legal name. Should I use my personal information when I sign up, even if I intend to open the solo 401k on behalf of my newly established LLC? Yes, we'll need your name. And then later in the questionnaire, we ask for the name of your business. We ask for how your business is taxed. We ask for your address, straightforward information. Okay, great. We thank you for the great questions. So we do want to take a moment to invite you to our community, mysolo401k.net/my community. We've got a library of videos and webinars. We have vibrant forums. I mean, we do have the largest community of solopreneurs, solo 401k owners, other interested parties like advisors around these topics. So that means it's an active community. We've got over 30,000 members. So please take a moment to join. It's totally free to join. All are welcome. So you don't need to be a client. Really, anybody that's interested is welcome to join. So please don't hesitate. Again, mysolo401k.net/my community. I have a questions about Rob's 401k. Can a call be arranged? I'm in active negotiations. Most definitely. Thank you so much for jumping on. If you go to our calendar, which all are welcome to use, mysolo401k.net/book. And you can grab a time. Well, it looks like that's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this Solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.